Hi there traders, this is Steve Miley. The market chart is on behalf of FX Explained, and this is the week commencing 13th of July 2020 with our regular MacroWatch update. Markets hesitant again, sending mixed signals. Let's start off with the macroeconomic and geopolitical developments that we've seen in here over the past week. Well, markets at the moment are caught between improving economic data and the concerns around COVID-19, particularly in the US, with rising cases in the southern states and also the western states. Florida posting its largest increase in number of cases in here over the weekend on Sunday, and things looking pretty dire in many of those US states in the south, in Texas, Arizona, California, North Carolina, South Carolina. So real concerns in here at the moment about those rising cases, and not just in the US. We've seen pockets of outbreaks in many other places globally, in Australia, in Victoria State, in Melbourne, in Germany, Tokyo, Beijing, and in the UK, in Leicester. In the UK itself, we've had lockdown rules have further eased despite these pockets of outbreaks. But we have had the UK Chancellor Rishi Sunak deliver his mini budget, offering further support to businesses and to the economy and to the consumer. There was also at the end of last week a positive remdesivir data released from Gilead Sciences with regard to the treating of the coronavirus. So let's take a look at how this has all impacted on the various global financial markets and asset classes. On the stock side in here, markets were trying to break out in early July. We looked at this in our last report last week, trying to break out to the upside, but we've kind of dipped back lower, back into the ranges that we saw in June, and markets not being able to really capitalize fully on those breakouts. So still some hesitancy here, but we did have a fairly firm end to the week with that remdesivir data released. But the Shanghai Composite showing a really strong surge higher in here throughout the beginning of July in here. An aggressive push higher for the various US stock indices, Chinese stock indices. And in the US, the Nasdaq in here, the Nasdaq Composite and the Nasdaq 100 hitting new record highs yet again with a strong end to July and a strong end to June and beginning of July. On the other side though, we're seeing US 10-year yields and global yields going to lower yields, higher prices. This is usually associated with a risk-off scenario. So moving to lower yields as bonds are being bought, bonds moving to higher prices, seen as a safe haven asset. So we're getting mixed signals in here. Indecisive with the major European and US global equity indices. However, China and the Nasdaq pushing higher. Bond markets in here pushing to lower yields, higher prices. That's usually seen safe haven. That's more of a risk-off scenario. And if we look at the US dollar in here, tailoring attention to the forex space, we've had some weakness in the US dollar. And that weakness in the US dollar, currently being seen as a safe haven, would point to more of a positive risk-on theme. But then we did get a rebound on the dollar towards the latter part of last week. The pound has taken a more positive tone in here against the dollar, partly US dollar weakness, but also some positivity coming through after lockdown measures were eased, and that was seen as a positive alongside the extra support given by the Chancellor to the UK economy. And if we finally turn our attention to the commodity side, we're seeing new multi-month highs in here for copper, breaking above those early 2020 peaks in here for the COMEX copper. And on the oil side, a more hesitant tone, but pushing to the upper end of a recent range in here for the light crude oil future. Somewhat hesitant, but a positive tone. So we're getting mixed signals. We're seeing kind of risk-on themes trying to come through, but not fully come through in here at the moment across all asset classes. Now let's take a look at the week ahead, week commencing the 13th of July. Well, obviously the US and global cases of COVID-19 are still going to be very much in focus, with those numbers particularly spiking higher in some of those southern and western US states. On the central bank front, we're fairly busy this week. We have Governor Bailey from the Bank of England speaking on Monday. We get the Bank of Japan and the Bank of Canada both on Wednesday. And then the Beige Book as well, released from the Fed. And then on Thursday, we get the ECB interest rate decision and statement. Also, we get earnings season start in the US in earnest this week, kicking off with the financials. We get this week JP Morgan, Citibank, Citigroup, United Healthcare, Johnson & Johnson, Netflix, Bank of America and Morgan Stanley, to name just a few. And then on the macroeconomic front, what do we have? We have that Bank of England Governor Bailey is speaking on Monday. Chinese trade data, UK GDP, German CPI and the German ZEW survey, all on Tuesday alongside US CPI. We get those Bank of Japan and Bank of Canada meetings and interest rate decisions with statements on Wednesday alongside UK CPI. The Australian employment report comes Thursday alongside Chinese GDP, industrial production and retail sales data. Plus Thursday we also get the UK employment report, that all-important ECB meeting, interest rate decision and statement, and then US jobless claims data. And we round off the week with the Canadian retail sales numbers. This has been Steve Miley, the market chartist for FX Explained. I'm going to wish you all a great trading week. Please do be safe out there. Take care, and I'll be back with you soon. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.